You have been told to build a sexy startup. You have been told to invent the next Facebook, to disrupt an industry, to change the world. That is a lottery ticket. The failure rate of a venture-backed startup is over 90%. It is a game of ego, where you burn cash for 5 years hoping for an exit that never comes. The 1%, the quiet 1% who actually have cash flow don't gamble on disruption. They bet on inevitability. They buy boring businesses, laundromats, HVAC companies, pest control, commercial cleaning, self-storage. They don't build from scratch, 0 to 1. They buy profitable engines that are already running 1 to 10. Right now, we are facing the greatest transfer of wealth in human history. It's called the silver tsunami. Millions of baby boomers are retiring. They own profitable, boring businesses. Their kids don't want them, they want to be TikTok influencers. Private equity won't buy them, they are too small. So these owners are desperate to sell. Today, on Wealth Architect, I am going to show you how to buy a $1 million cash flowing business with little to no money down. We are going to deconstruct seller financing. We are going to break down the SBA 7A loophole, and I am going to give you the blueprint to become an acquisition entrepreneur, someone who skips the starving founder phase and goes straight to the CEO phase. Stop trying to invent. Start buying. Welcome back. I'm Ben here. We don't play the lottery. We own the casino. Let's define the problem. Why is everyone obsessed with startups? Because of the media, the social network, Shark Tank. They glorify the idea. They tell you that to be rich, you must have a brilliant, unique idea. The reality, ideas are worthless. Execution is everything. When you start a business from scratch, you are fighting a war on 3 fronts. Product market fit. Does anyone want this? Customer acquisition. Can I find them? Operations. Can I deliver it? You have a 90% chance of dying on one of those hills. The acquisition advantage. Now, imagine you buy a 30-year-old plumbing company. Product-market fit. Solved. People have been buying for 30 years. Customer acquisition? Solved. They have a phone number that rings automatically. They have 5,000 past customers in a database. Operations? Solved. They have trucks, tools, and employees who know what to do. You are not buying a project. You are buying historical cash flow. You are stepping onto a moving train. Your job isn't to push the train. It's to steer it. This is the difference between being an inventor, high risk, and an investor, lower risk. The wealthier investors? Why is this opportunity happening now? Because of demographics. The data. There are roughly 73 million baby boomers in America. They own about 2.3 million small businesses. 10,000 of them turn 65 every single day. The problem? They want to retire. They want to go to Florida, but they have a problem. Who buys the business? Their kids? No. The kids went to college. They are doctors, lawyers, or digital nomads. They don't want to run a septic tank company. Private equity. No. A business making $500,000 a year is too small for Wall Street. It doesn't move the needle for BlackRock. Competitors? Maybe. But competitors often just want the client list, not the employees or the brand. The crisis, if they don't sell, they have to liquidate. They have to fire their loyal employees, sell the trucks for scrap, and close the doors. This destroys their legacy. The opportunity. This puts you in the power position. You are the white knight. You can walk in and say, I will keep the name. I will keep the employees. I will steward your legacy. And I will pay you a fair price to let you retire. Because the supply of sellers is huge, and the demand from buyers is low. Everyone is doing crypto. You can negotiate incredible terms. What kind of business should you buy? We look for Boren. We look for Lindy. The Lindy effect. The longer something has survived, the longer it is likely to survive. The criteria. Essential service. Can you delay it? If your toilet explodes, can you wait until next month? No, it is reset. If the economy crashes, you still need pest control. You still need trash removal. Unsexy. If it's sexy like a bar or a fashion brand, everyone wants it. That drives the price up. If it involves dirt, sweat, or unblocking drains, nobody wants it. That drives the price down. Cannot be outsourced. You cannot fix an HVAC unit from India. You cannot clean a carpet with AI. It requires physical presence. This is a moat against globalization and technology. Recurring revenue? We want subscriptions. Or at least, repeat customers. Lawn care, pool cleaning, bookkeeping. These businesses are not unicorns. They are cockroaches. You can't kill them. They survive nuclear winters. While the tech bros are panicking about interest rates, the owner of the local laundromat is collecting quarters in a bucket. Cash flow doesn't care about hype. Now, the objection. Ben, I don't have $1 million to buy a business. You don't need it. This is where the magic happens. You use the business's own money to buy the business. The tool, seller financing. In a normal house sale, the bank gives you the money. You pay the seller leaves. In a small business sale, the seller becomes the bank. The deal structure. Let's say a business is selling for $1 million. It makes $300,000 in profit. SDE seller discretionary earnings. Bank loan SBA 7A. You get a government-backed loan for 80% $800,000. Seller note. You ask the seller to carry 10% $100,000. They get paid monthly over 5 years with interest. Your cash. You put down 10% $100,000. But I don't have $100,000. Okay, let's get aggressive. You negotiate a 90% seller note. You tell the seller, I will pay you the full $1 million, but I will pay it over 7 years out of the profits of the company. Why would they agree to this? Tax benefits. They don't take a huge capital gains hit in year 1. They spread the tax over 7 years. Interest. You pay them 6 to 8% interest. They make more money than if you paid cash. Legacy. They trust you to keep the business alive, which pays them. The result? You walk in. You take over the keys. Year 1 profit, $300,000. Loan payments to seller, $150,000. Net profit to you, $150,000. You just bought a $150,000 year salary for $0 down. And in 7 years, you own a $1 million as asset free and clear. This is financial alchemy. Where do you find these deals? Do not go to bizbuysell.com. That is where deals go to die. That is the retail market. The businesses there are overpriced and picked over. The architect goes off. We call this proprietary deal flow. The protocol. Identify the niche. I want to buy a commercial cleaning company in city. Build the list. Use tools like Data, Axle, or simple Google Maps to find every cleaning company in a 50-mile radius. Look for the ones with bad websites. No Facebook page. A Gmail address. Why? Because that means the owner is old. They aren't trying to grow. They are tired. The campaign. You send a physical letter, not an email. A letter in a hand-addressed envelope. The script. Hi, I'm Ben. I'm a local entrepreneur looking to buy a cleaning business in the area. I'm not a broker. I'm not private equity. I want to honor your legacy. If you've ever thought about retiring, let's grab coffee. You send 500 letters. You get 10 calls. You get 3 coffees. You buy 1 business. That is the funnel. You are bypassing the broker fees. You are building rapport directly with the owner. You found a seller. They want to sell. Now you have to verify the numbers. You must be a detective. The SDE audit. Small business owners lie, not maliciously, but they run personal expenses through the business. Their truck is a business expense. Their family dinner is a business expense. Their golf club is a business expense. You have to add back these expenses to find the true profits. Seller discretionary earnings. But you must verify the tax returns. If they say, I make $200,000 cash, but I only report $50,000 to the IRS. Run. You cannot lend against under-the-table money. You only buy what they can prove to Uncle Sam. The red flags. Customer concentration. Does one customer make up 40% of the revenue? If that customer leaves, the business dies. The key man risk. Is the owner the only one who knows how to fix the machine? If he leaves, do the customers leave? You need a business, not a job. Declining trends are sales dropping 10% year over year. Don't catch a falling knife. You bought the business. You are the CEO. Do not put on the tool belt. If you are unclogging toilets, you bought a job. The first 90 days, do nothing. Just watch. Learn the culture. Don't fire anyone. Day 91. Optimize. Raise prices. Most boomers haven't raised prices in 10 years. You can usually raise prices 10 to 15% immediately. That is pure profit. Digitize. Give the technicians iPads. Set up automatic billing. Build a Google My Business page. Get reviews. Install a general manager. Take that $150,000 profit. Pay a GM $80,000 to run the day-to-day. You keep the remaining $70,000 as truly passive income. Now you have a cash flow engine. Then you go buy a second one and a third. This is called a roll-up. We have a distorted view of wealth in this country. We think wealth looks like a hoodie and a laptop in a coffee shop. Real wealth looks like a fleet of dirty white vans parked in an industrial lot. The hoodie guy is stressing about his next VC round. The white van guy is at the bank depositing checks. You have a choice. You can try to be the genius who invents the future, or you can be the architect who buys the present. The boring business blueprint is not sexy. It will not get you on the cover of TechCrunch, but it will get you freedom. It will get you cash flow, and it will get you there fast. I want you to start the hunt. The Google Maps challenge. Open Google Maps. Type in plumber or electrician or laundromat near you. Scroll down, find the ones with less than 10 reviews and no website. Tell me in the comments. I found a type of business with no website. That is my target. If you want to know how to structure the legal contracts for a seller finance deal, subscribe. We are building the toolkit for the 1%. Hit the bell. Class dismissed.